You know, one of the things I love about Plus More Limited is how they take everyday situations and turn them into real opportunities. For example, they recently worked with a pharmacist who was paying way more tax than they needed to. Nothing fancy, just a busy professional doing long shifts, running a business, but not having the time to step back and review things. What I love is that it wasn't about complex tricks, it was about noticing the everyday details most of us overlook. The results was life-changing for that client. More money to reinvest in the business and more time to focus on serving patients instead of stressing about tax.
Hi guys, so welcome to this podcast. We've got a really different topic today. We're talking about pharmacy, finance, and how investing can go wrong or right, depending on how you do your money management and who you get your advice from. As a locum, we kind of think we're entrepreneurs because a lot of us work as self-employed, and there is this idea that because you're self-employed, you're a businessman or businesswoman, and we are businesses, which we are, but that's a very simple in terms of running a business, quite simple, straightforward. You get your locum shift, and you do your shift for the day. You go home, you get paid. Hopefully, if you're not working for Jutes, but generally, then you'd get paid, and that's as a self-employed, you are running as a business. But the investment side of a business can get really complex. So once you've got a pharmacy, once you've started as a local pharmacist, first thing you got to decide is, am I going to be a sole trader? Is it going to be a limited company? Where do I put my money? What kind of business bank account to take? What kind of business bank account to open? And then at the end of the year, once I've got some money saved, what do I do with that money? Do I need a pension? Do I get a SIP? Buy a house? Buy an investment property? There's so many different questions that you could ask. So just to try and demystify some of it, obviously there's a lot to unpick and talk about. We've got a special guest today. Mohammed is the man who is an expert in wealth management, a good friend and someone I've spoken to at length, and I've probably done your head in, I think, so many times about investments and, how to manage your money as a entrepreneur, as a pharmacist, whether you should do halal investment, ethical investment, so many things literally, I think half his hair went grey because of the amount of questions I've asked him. So today we decided, you know what, we're going to have a real conversation on a podcast. And I think you guys need to hear what Mohammed has to say about some of this stuff, because he is someone who is an expert in, I think your background is in halal finance, or you're a specialist.
I have a broad background, so in wealth management and also a fine area of UK trust law.
Okay.
Also family investments. But yeah, the big.
But I stop you right there because you got a really long list. So I'm going to hand over to Mohammed, and he's going to tell you from the beginning his background and why he's an expert in what he does.
So thank you very much for that, Tohidul. So I dislike talking about myself, but I hold all the regulatory permissions. I am a chartered wealth manager by trade, as well as being an associate member of the Society of Trust and Estate Practitioners. I am co-authoring a couple of books, particularly in the space of Islamic insurance and conventional insurance, as well as charitable endowments, particularly in relation to Islamic trusts, known as Awqaf or Waqf, largely during the Ottoman period, how it evolved and dissolved. But by trade, I am a private client wealth manager, and I run a business in Moorgate in the City of London with a couple of other fee earners and some admin staff.
Okay.
Thank you.
So that's just basically what you do.
That's basically what I do.
I think let's first look at the main question a pharmacist or local pharmacist would be asking. Should I set up as a sole trader or a limited company?
Very good question. Okay. It's not an easy answer. Okay. Because everyone's circumstances are going to be different. And like I was saying earlier, it relates to the ambitions of that particular individual as well, of that particular locum. Okay. Now, being a sole trader is often the simplest way to run your tax affairs. Okay. But it's quite limiting for a number of different reasons. Okay. Especially if you're an ambitious locum who wants to then go on to, let's say, set up a pharmacy practice, or go on to utilize his investments in a way that expands into different particular sectors. I would generally say, if you're looking to test things out, okay, setting up as a sole trader, usually not a problem. And then in a couple of years down the line, when you've adjusted to the environment, then you can decide, you know what, let me move into the limited company arena, because you're going to have a lot more tax efficiency within that limited company structure, especially as your income grows. And that's largely because you can decide to keep more money in the company as opposed to extracting it. Whereas in a sole trader model, you have to extract everything. Okay. In addition to that, don't underestimate the protection that a limited company can actually offer. If your PI fails for whatever reason and you have a sole trader business, you are personally liable. But the limited company structure is literally your last line of defense. Okay? So you can segregate your business assets from your personal assets. Okay?
I mean, so in the interest of of a locum pharmacist, I mean, obviously, if there is an issue in a professional practice with GPAC, the regulator that'll be dealing with us directly.
Yeah.
So there's very rarely where a pharmacist who's a locum with a limited company would be dealing with any or would have any other assets.
Yeah.
Your average locum, say for example, if I'm a locum, what I've been doing for the past, since 2005 when I started locuming was, I set up a limited company. I started off as a sole trader, to be honest. And then within 3 months, my expected income was going to be over 60 to 70,000 in the year. So my accountant said, because of how much you might look to be earning, projected if you're earning this much now, over the next 1 year, you'll hit 60, 70. You're better off going into a limited company.
Yep.
I have no assets in the company.
Yep.
Apart from what I earn.
Yep.
Every month, which I extract as a.
But you have personal assets.
Yes.
Yeah. So that's what that's what I'm talking about. You need to segregate your personal assets away from your business assets. Now, yes, within the limited company that you've got no assets. That's fine. Mm-hmm. It's purely a vehicle to take the income. That's not an issue. Imagine you didn't have that limited company wrapper. Mm-hmm. Okay? You'd have personal assets. So your business, anything goes wrong, if your PI didn't actually cover it, you're personally liable.
Okay.
That's a huge issue. Okay. Mm-hmm. But within the locum space, though, as I understand, you generally got decent insurance cover to cover those type of eventualities anyway. It's more about that long-term mindset for a locum. Okay. Like I said earlier, if they really want to professionalize and actually grow their business, okay, you can only really do that if you end up starting a business. Okay. Now, if you don't want to do that, fine, all good and well. All right. There's not going to be a huge amount of difference, but within that limited company setting, the world becomes your oyster in terms of tax management and in terms of when you then set up subsidiary companies to separate your, let's say, your commercial property assets, your trademark, your intellectual property assets like trademarking, as well as where the actual trade is happening. All of those particular type of entities within a well-structured holding company, as your business grows, could become incredibly lucrative down the line. And especially if you're one of those ambitious business owners who thinking, do you know what, I'm going to be running this business for the next 20 years, and then I actually want to sell it. Then you've got a whole load of other stuff within that corporate structure that you'd be able to benefit from. So you'd be able to sell one aspect of the business. It's called substantial shareholding exemption, especially when you've got a holding company that owns shares in a subsidiary company, a trading entity here, and you want to sell that. Okay. If you were to sell that in this corporate structure, okay, you've got no tax to pay. You've literally got no tax to pay. Okay. But if you were to sell that without that holding structure, okay, you're going to be paying capital gains tax.
Okay, so I suppose for an average locum
Yeah.
that work 9 to 5 in a pharmacy and they put their money into the limited account, bank account, they'll be thinking, well, this might not apply to me, right? But with the current contract changing, a lot of the pharmacy will be now focused on private services or NHS services. So I'm thinking, well, if I'm a locum and I've got my established locum business business account, I've got the company set up, I could now set up a private clinic within this company structure, rather than having to set up a new company. And then from there, I've got a company trading history as well. Easy to get a loan out. I can now, if I need to borrow £20,000 to set up a private clinic, I've got that money there.
Correct.
Or I can borrow that money there, or I can use that asset.
So that track record becomes really important as well. Okay, so this is why I'm saying it's really bespoke to the locum. Okay, so an advantage of a sole trader business, okay, is if you want to obtain a residential mortgage, want to buy your first home. Generally, it's going to be easier if you have a sole trader income coming through, okay, because you don't need the company accounts and so forth. Okay, it's a lot cleaner on that side. But it could very well be that all of that aspect of your life is actually sorted. Okay. Within a limited company space, yes, you've got all of those things that I mentioned earlier, but also don't forget you can make pension contributions via your company. And those pension contributions have a powerful mechanism to do a further business growth later on down the line. Okay.
We're going to have to talk about the pensions because that is a topic that comes up a lot on the Pharmacy Lounge, and a lot of locums don't really or they don't understand what private pensions are, what pensions are in the first place, or how do you set one up, who do you go to, because that in itself is another huge topic.
Yeah, totally. Pensions are effectively a retirement planning vehicle. Okay. Yes, in the past they have been used as a succession planning vehicle, okay, but if we have time to talk about that, I'll definitely touch on it. However, it's a retirement planning vehicle, okay? What I mean by that is, look, one day you're not going to be working at the same rate you're working today. So whilst you are working, you are accumulating income or you're accumulating capital. And then when you stop working, you're in that decumulation phase. You're going to be decumulating the assets that you've built up during your working years to fund your retirement lifestyle. Now, if you're going to be retiring at age 65, 66, 70, whatever that date is, okay? And I want the viewers to broaden their understanding of what retirement means, okay? Because retirement could mean you're not going to be working 50 hours a week anymore. You're only going to be working 20 hours a week. Okay, so there's going to be an income shortfall. Okay, how is that going to impact your lifestyle then? So undertaking a cash flow planning exercises between now and throughout retirement and into retirement is a very important exercise that should be done regularly. Okay, it's the type of work that I do with my clients. Okay, having said that, once you are aware of what your asset trajectory is, okay, you can start to make decisions. Look, I need to set up this type of pension plan, okay? And the reason why I say this type of pension plan, because pension plan for you, Tohidul, okay, could be very different from a pension plan for somebody else, okay? I'll give you an example. That somebody else could be quite entrepreneurial, okay? And he could say to me, Mohammed, in around 10 years' time, I want to purchase a commercial property where I want to run my pharmacy business from. Okay? That's a totally different type of pension plan here. It's a totally different decision it's a totally different decision or a totally different result of a decision between a sole trader and a limited company. Okay. For such a client, it will be a limited company day one. Okay. And what we can do is by making investments into a particular type of pension, okay, via the limited company, we're building up a fund that could be used to purchase your commercial property many years down the line or 10 years down the line, okay? Or you could take a loan out from that particular, from your own pension fund to help fund that particular purchase as well. So you've got a whole host of things happening here.
I think we're going to have to make that into another podcast episode.
Yeah,
Just
totally.
purely going into pensions because it affects every single pharmacist. Every one of us will be affected by it. And I think the first question I would probably want to know is, when is a good time to start thinking about it?
Yesterday.
And I want you to think about, you gave the answer away. I'll just wait for the next episode. Okay, now we know it was yesterday. I want to get you onto the next question because I think we're going to go off on a tangent today about every 2 minutes. Next question would be like, how can I legally, and I'm emphasizing legally, reduce my tax bill as a locum?
Good question, okay? Regrettably, right, there's no panacea here, okay? There's no magic wand here, okay? You know, when it comes to tax planning, and I deal with multi-generational families here, okay? So when I talk about multi-generation family wealth planning, the people who really benefit from great tax planning is when grandparents have sorted out certain things for their children that the grandchildren also benefit from, okay? I know that sounds quite blow your mind, okay? But really it comes down to how you're actually protecting assets at the top level that you can actually benefit from without it adding to your personal estate, okay? Now, I do appreciate I've gone on a tangent, okay? Now, but hear me out. If you're a locum and you're earning less than 100 grand a year, there's not much you can do. Okay, I'm going to list a few things that are conventionally available to you. You can invest in something known as an enterprise investment scheme or seed enterprise investment scheme. Okay, EIS, enterprise investment scheme, will give you 30% income tax relief. Okay, what that means is the income tax you've paid, okay, that provided you've paid a certain amount of it and subject to the amount of the investment that you make, 30% of your investment could be set against your income tax bill, effectively. So you can claim that amount back, essentially. So let's say you make 100 grand into an EIS product, okay? It's 50% if it's SEIS, okay? But if it's EIS, okay, that means you can theoretically get an income tax relief of 30 grand, okay? That's a huge amount. Having said that, though, do you have 100 grand to invest if you've been earning 75 grand a year?
No.
Probably not.
Not unless you live
Okay.
with your parents.
Correct. Okay. So although, yes, locums earn above average. Okay. So the average income in the UK right now is around 37 grand a year. For graduates, it's 42,000. Okay. And we'll come on to, there's a whole load of stuff I can talk about student loans in a bit. But bear with me just on this particular point. Gosh, what was the point?
The EIS.
The EIS. Okay, in terms of tax savings. Okay, so just on that, okay, you need to be aware of. All right, great, I'm getting this windfall of tax back. Okay, but what is the investment risk that I'm making? It's a significant investment risk that you're making when you're moving into an EIS environment. Okay. Ideally, we wouldn't want to go into EIS or especially not SEIS at this particular stage in your career. So when it comes to tax efficiency, all right, for you, the number one piece of advice that I can give you: speak to an accountant who specializes in locum pharmacy work, because they will be the ones who'll be able to advise on all of the legitimate expenses you can actually claim and how to structure your tax affairs. And I'm not talking merely about sole trader and limited company, okay? But I'm also talking about, can you use your home as part of your business? Okay, that sort of stuff is going to have that marginal gain that will have incremental value over the years. Okay, I think the other thing that I would say when it comes to tax efficiency, okay, is it's going to be different between a sole trader and a limited company and even a partnership setup. Okay, especially when you're working with potentially other business owners where you've not actually incorporated. So once again, this is where an accountant can really earn their annual fee.
Okay, that makes sense. I think again the using your home internet bill, your phone bill, that's a common question we see as well. Can I see as a locum you're not really working from home, but you do your CPD from home?
Correct.
Right. You do your accounting and looking after your finance, all of that you can do from home.
Correct.
So yeah, that's another one to add to the list of expenses. So I suppose in terms of what can be claimed, there's quite a big list.
Yeah.
And the accountant is the best person to ask.
Like not just that, business development work can be done from home.
Yeah.
Okay. How are you going to expand your limited company? Okay.
Mm-hmm.
You could be looking for additional clients. Okay. Sure. You could be looking for potential sites to actually purchase. All of that is work.
Yeah.
In terms of growing the business.
And for a locum, looking for new employers to work for.
Correct.
Right. I think cars are common one.
Yep.
Every locum needs a car.
Yeah.
Unless they travel within, on public transport, they'll need a car. Again, common question: should I get an electric car or should I get a normal car? How much can I, do I claim the fuel or do I claim to just put everything through my company accounts, like all the expenses of the car? Can I put everything through my company expenses?
Yeah, very good question. Generally speaking, okay, if you benefit from the limited company, take with the modern electric vehicles, there's a lot of incredible concessions and exemptions that are actually made. Now, you need to look at that quite carefully, and it really does also come down to how many miles you're actually doing throughout the year and the nature of that vehicle. So there is a mathematical exercise that should be done, okay? And this is where your accountant can really play a big part in determining for you, okay, whether a modern electric vehicle is going to be better than a standard petrol or diesel.
Okay, I think that answers the question. And that's the end of this segment of the podcast. Thank you. That was very informative. And on the next one, we'll be talking about savings and investments. And I think the really interesting one is going to be Sharia compliant loans and business loans. That's going to be coming up the episode after as well. So if you're not already subscribed, do subscribe to the channel. And we've got some really interesting podcasts coming up for you. See you on the next one.